Hey guys, Jay here, your local realtor here on the Big Island, and in today's video I'm going to be talking about seller's financing or owner's financing. And the first thing I want to clarify is that even though a lot of people call it seller's financing, the legal technical term is actually purchase money mortgage, or PMM for short. In this kind of a transaction, the buyer would essentially take out a loan from the seller and then make monthly payments to them instead of a bank. So essentially, the seller takes on the role of a bank. So why would a seller want to do this? And more importantly, what does the math actually look like for the buyer? I'll explain all of this by going over the 4 simple parts of a purchase money mortgage. The 4 parts are the down payment, the interest rate, the monthly payments, and the big finale. First, the down payment. In a normal bank loan, you might put down a 3 or 5% down payment, or maybe even 10 or 20% to avoid the private mortgage insurance. But with a PMM, the seller is going to want you to have more skin in the game. Usually, they will ask for at least a 20 or 30% down payment. Most commonly, it's 50%. The reason for this is because this kind of an agreement is actually a risk for the seller. If the buyer stops making payments, the seller will have to go through a lot of legal paperwork to get that property back. The process would be very similar to a foreclosure with a bank. So the big down payment up front is a form of security for the seller. The second part is the interest rate. Since the seller is basically doing the buyer a favor by skipping strict bank rules, usually they will charge a slightly higher interest rate than a bank would. So if a bank is charging around 7%, the seller would probably charge 8 or 9%. Although here on the Big Island, there's plenty of sellers that offer a lower rate than the bank, especially on vacant land. This is a convenience fee for bypassing a traditional bank. Because usually when somebody is buying a property using a PMM, they're doing that because for one reason or another, they are not able to get a conventional loan for that property. The third part is monthly payments. This is where it gets interesting. Even if the seller wants to only give you a loan for 3 to 5 years, we usually calculate the monthly payments as if it were a 30-year loan. This keeps the monthly payments small and affordable, giving the buyer time to build a home and maybe refinance it with an actual bank. Or it gives them time to collect enough money for part number 4, the balloon payment. This part is the most important to understand. Most Hawaii sellers are not going to want to be your bank for the next 30 years. They're going to want their money back as soon as possible. So they will give you a deadline, usually 3 to 5, maximum 10 years from the purchase date to pay off the loan in full. The reason it's called a balloon payment is because for 3 years, or however many years the agreement was for, you make small monthly payments until the very last date of the agreement. On the last day, the balloon pops, and you have to pay the entire remaining balance at once. Usually the buyers handle this by either selling the property, collecting enough money to pay off the loan by the end date, or by finally getting a traditional bank loan once they've built up enough equity in their home. So when would it make sense to do this in Hawaii? Most of the time, I see purchase money mortgages used when someone is buying vacant land where banks are scared to lend. Or if you're an entrepreneur that has a great business but a complicated tax return that banks don't understand, and therefore are not willing to give a loan. But the important thing to remember that this is a slightly riskier deal than normal. So it's definitely not a handshake deal. It's highly advisable to use a realtor or an attorney to make sure that all the paperwork is done correctly and legally so everybody involved is protected. If you would like to know which active listings on the Big Island are open to a PMM right now, or if you're a seller wondering if this might be a good move for you, reach out to me and I would love to help you find the perfect deal. Thanks so much for watching, and I'll see you next time. And if you made it all the way to the end of the video, I have a couple of dad jokes for you. These are a little bit bad, so make sure you use them sparingly and with the right audience. The first one, why did the cop show up early to the protest? To beat the crowd. And what do you call 4 Mexicans in quicksand? Cuatro Cinco.